Mm, All right, welcome everybody to another episode of Real Estate Wholesaling Analysis. This is episode 44, I believe. Um, if you want to have access to the previous recordings, I always do drop the recordings on meetup.com if you have been coming from Meetup. Welcome to this episode where, again, we're going to be going through another real estate wholesaling analysis. We select random markets, so that way we can keep it consistent in terms of always picking something new. So that way we can see how the process goes if you happen to be looking into like a new market in terms of real estate wholesaling. My name is Elton, like Elton John. I'll be your host for now until whoever knows when, probably until like episode 500, if anything. But other than that, the way these series go is it gets repetitive, and that's part of the business of real estate wholesaling. It's constantly repetition, just constantly getting the work done into becomes backhand arsenals and tools where we can do this in our sleep, just like any other business, just like any other careers. It's pretty much just, again, repetition, repetition, repetition. That's what this whole thing is about. The way this thing gets run is pretty much simple. It goes starting up from, we go through a quick presentation so that way I can touch up some basic points of real estate wholesaling. After that, we're going to go dive into real estate wholesaling live analysis, where we actually look at deals out there that are available on market. Just because on market analysis is slightly, very, very slight, different than doing off market analysis. The reason why is because you have a third party involved, aka a real estate agent or a broker from time to time, and just the relationships on that are significantly tenfold when it comes to doing that work. Just because a lot of agents are already doing a lot of the work that you're pretty much doing as a real estate wholesaling, where you're cold calling, marketing, pretty much sending out flyers, the whole 50 yards of it. Afterwards, we're going to get some Q&A if you happen to have like some specific questions about the real estate wholesaling steps, which those steps are lined up over here. This is pretty much the entire process of real estate wholesaling. You go out there, you either look for people that are reach out to people that are interested on selling. There's potentials out there that there might be some sellers that are actually looking for you or looking for somebody to buy their property as well too. So it's a vice versa thing. Then, of course, some of them you might have to do a skip tracing. And again, the steps line up from there. But what this series is mainly about is going through the repairs, going through the estimates, going through the analysis, or okay, the highlighted part of understanding where our offers should be aligning. But I always like to give a little extra perspective and a few extra tips along the way, which will touch bases on those moving on forward. So the very first foundation when it comes to real estate wholesaling, or just real estate overall, it's pretty much this acronym right here, ARV, or after repair value. And basically what this is if you're doing some fixing and flipping out there and you're trying to get the property fixed up, you're trying to bring it up to 2024 standards, pretty much update the entire thing because it's an ugly home whatsoever. You're trying to find what the potential value of the property has once it gets fully fixed up. And when it comes to the ARV, it is going to be very different across all markets nationwide. From California, it's very expensive. To the Midwest, you're going to be finding a lot of properties out in the Midwest ranging from $200,000 to $250,000. That's if you're looking to like buy, fix and flip. Some other investors are looking to buy and hold. Some of them do the updates on those buy and hold properties, so that way they're able to bring out the rents as well too. But when it comes to the ARV, that is the very first foundation that you have to look for, or AKA know your market, which I'll touch bases on how to know your market in a few seconds and how to research and analyze any single market out there. That's why I like to do random markets. I don't like to do the same market over and over and over again because, again, my goal is to expose how to analyze all markets because there's a lot of opportunities out there. It's just who's reaching out to who. The phone works both ways, so they could be reaching out to you because they got a flyer from you, or you could be reaching out to them, and it's all about interest from there. And sometimes it's all about getting creative as well too. Now, part of the process of wholesaling is you have a property, you find potential, you get the property in the contract, is finding buyers. And when it comes to finding those buyers, especially with the ARV, a lot of buyers are going to be calculating their numbers very differently across the board. Trust me, I've met a lot of investors. There's been some investors on these live events as well too. and they all do the analysis and their due diligence very differently. I have three examples over here of three investors that I've met, how they calculate a lot of their analysis and their due diligence whenever they're looking at a single opportunity. And it's no harm to them, no foul to them at all whatsoever. It's just that's how they learn from maybe a coach they learn with, maybe some little touches they made along the way when they were starting to do a lot of their projects. Again, that's fix and flip and buy and hold as well too. So you make your own little twitches and you start to find what best works for you, and that's how you start creating like your own formulas when it comes to all this. So again, when it comes to connecting and finding buyers, it is always good to find out like, hey, Mr. Buyer or Miss Buyer, mind me asking, like, how do you calculate a lot of your numbers, or how do you come up with like an offer if you were to come across an opportunity? Simple as that. It opens up the game for them to see how you analyze. So that way you let them know that, hey, I'm a wholesaler. I can bring you deals. It's just let me know exactly what you're looking for, or okay, find that little buy box as well too. But again, you have to find out how exactly they do their numbers. Next part of the process of the ARV, which leads to the next foundation, is, and it says it on the word on the ARV, is repairs. When it comes to repairs, the sky's the limit. When it comes to repairs, I don't like to spend a lot of time on these repairs. Even some fix and flipper investors, sometimes they can under budget, or something else can really happen on it, where you can have to bring like extra money into like the project, which extra money cuts into profits, and it's just part of the process. Again, it's not going to be a perfect game every single time, because each single home is going to have its own uniqueness. Each single home is going to have its own project expenses and all this whatsoever. So it's just when it comes to repairs, it is always good to at least if you're trying to do like your own projects as a fix and flipper, it's always good to get like 5 different numbers from general contractors, so you can get like a perspective. And once you start doing multiple projects in an area, you start to understand it. And if you start a wholesale in that area, you're gonna get an understanding about roughly how much repairs are gonna cost from there. So going to these numbers that I have over here, these are average numbers nationwide that I like to apply, with the exception of some of those expensive states and cities. Some states like California, definitely Florida, definitely Washington, definitely New York, and a bunch of other states and cities. Usually we like to add an extra dollar amount per square foot. So if you're looking at repairs of light repairs, these are going to be very minimal type of projects where the property is really well maintained by the homeowner or investor. And usually these are going to be very light stuff that you're going to be looking, and most of the time is more on the rental side type of projects that you're going to be looking into these, where the work is going to be $10 to $20 per square foot. Looking at average repairs, this is where we start getting into fixing and flipping. The average repairs cost between $25 to $40 per square foot. And these, you start getting involved more on those major areas like the flooring, like the windows, doors, kitchen, bathrooms, lighting, electrical, utilities, appliances, maybe some landscaping, painting. So you see, you start getting more involved on that project type. The last type of project, and the most expensive of them all, is a gut check repair. And with the gut check repair, it's pretty much two things. You're going to be either demolishing the property and starting all over again, maybe because it has two lots, or maybe it has one huge slot, or maybe the area or the lot is a R1. And what a R1 is, basically a multifamily residential accessibility, where you can build multiple townhomes or multiple or a duplex or triplex in that one lot, which if you look at the streets as well too, maybe somebody else, or there's some other things happening on that same street, where you basically want to match up the neighborhood to what it looks like. And usually with these projects, they're going to cost a little bit more, between $45 to $60 per square foot. But going back to the main bundle of all these, especially on those heavy, expensive and states and cities, usually we like to add $15 to $20 more per square foot per each category on type of repairs. From light all the way to gut repairs, you want to add those $15 to $20 per square foot. But when it comes to wholesaling, it's always good to get like an estimate of repairs. So that way, whenever you bring in that opportunity to an end buyer, they get a sense of how much it costs. Sometimes they'll definitely negotiate with you based on that. They'll push you like, oh, this project actually needs more than $45,000. It needs roughly $75,000. And it's like if you know the market and they're just trying to haggle you based on your offer, just so that way they can bring you and negotiate like on the price down from whatever it is that you're trying to sell your assignment of sale for, then that's a very common strategy as well too. And then sometimes some of them is definitely going to need more just because again, we can always under budget as well too. So there's no such thing as over budgeting. There's definitely a bigger thing as under budgeting. So it's always play it safe by over budgeting. But again, at the same time, you can really never know because real estate is pretty much a plus and minus game. The property ARV could be more, the repairs could be less, the closing costs could be more, could be less. So again, it's a plus or minus game. So don't spend too much time on repairs. Just go based on the price per square feet, and then afterwards, let the end buyer do whatever they want to do. Because again, at the end of the day, they can spend more or they can spend less. Now, part of the process while looking into a deal is we want to make sure that we're analyzing like the area or the market area or the neighborhood pretty much at this point. And what you want to do with these is you want to certain parameters and certain restrictions whenever you're looking for comps or comparables. Some of those restrictions are definitely the square footage. So if you're looking at a 1,500 square foot home, you could go plus 300, so all the way up to like 1,700 down to like 1,100 on the square footage of looking for comps. So that's going to be like your range of the size of the properties. Lot size, this is more if you happen to come across a property that's like a quarter of a lot, half a lot, a 1, 3, 5 lots, in terms of like square footage of those lots as well too. So you would definitely want to stick to those lots. So it's not more comparing about the property, it's more about comparing the entire lot size overall. Next is going to be the radius. And the reason some of them recommend radius, some of them don't. And I like to recommend it. The reason why is because the closer you are to your subject property, the more accurate you're going to have a precise number on what it is or a close number. The further you start going out, you definitely have to make some price adjustments because again, you're going further out from the neighborhood, from the area, or what actually happens. Just crossing a major highway could be the difference to a whole different grade level neighborhood as well too. So I always like to stick within the same neighborhood, no matter what a lot of the restrictions are. Again, you can make exceptions, but as soon as you start making exceptions, you just have to make some price adjustments. And when it comes, one of the major obstacles when it comes to reaching out or going through the neighborhoods, analyzing those neighborhoods, is you're going to come across with these double yellow line roads. I like to call them. I don't know what would you may call them, but they're going to be like the main roads of the entire city where there's going to be a constant flow of traffic. And with these traffics, you're going to have buses, construction trucks, semi trucks, delivery trucks, commuters to and from home. So it's just a constant flow of traffic every single day where it basically is splitting up one neighborhood to another neighborhood. No matter how similar the homes might be at the edges of each single street, um, unfortunately, you can use it from time to time. You can make some exceptions, but you have to price that adjustment as well too. But it's going to be, again, it's a difference of neighborhoods. So it's always good to stick within the same neighborhood. But I always recommend to not pull that whatsoever as a comp because again, it's in a whole different neighborhood. That's why these major roads are splitting up the neighborhoods overall. Looking into comps, you definitely want to find 3 to 5 comps in the area. And I always like to look not just at what has sold in the past or has sold in the last 6 to 9 months, but I also like to look at what's currently on the contract or pending at the moment, because what has sold in the past is basically telling you this is the market history back here. What's currently pending on the contract at the moment is telling you what's happening with that market at the current moment. So if you're coming across a lot of properties that are under contract at the moment, if you see like 10, 20 in that whole city, metro, county, or just the city overall, is basically telling you like there's a lot of activity happening. There's more properties going sale, and especially look how far ago was it that they were listed for sale as well too. And of course, properties that are for sale and are available out there is basically telling you what the future holds. It's just we have to wait until that property sells. if it happens to sell at all whatsoever, to see what the market is going to be doing overall. So that's a quick analysis on terms of like those neighborhoods and pretty much a few key topics. But right now we're just going to dive into some analysis because that's what you guys are here for, to if you're trying to enhance your skills in terms of like analyzing. So let me unshare this and close this out, and let's head over to some online sites and let's look for some deals. If you guys happen to have like a market, a county market, an address, or anything that you want me to analyze specifically to your needs, by all means, I'll definitely be interested on doing that. So that way I can help you analyze your market. If you don't, then I am going to be selecting my own. Did I close it? Oh no, I didn't close it. All right, let me share this so that way you guys can see this. Share. Awesome. All right, here we go. Let me pull. Where's Chrome? Where's the spin the wheel? All right, cool. Again, if you guys don't have an address, again, you can an address for a city or county. Like I said, you can definitely drop it in the chat. So that way we can go through that. If you don't, then I'm just gonna select the random market over here. And I don't see anything there, so let me just go through here. Syracuse, actually that was the last episode that we just did. So 43, episode 43, we did Syracuse, New York. So let me select something else. We got Savannah, Georgia. All right, let's go through Savannah, Georgia. What I'd like to do is, what is, I don't even know. Savannah, oh, with an H. I don't know why I spelled that. Savannah, GA is in what county? What I like to do is whenever I look at a property, or whenever I look at into a city, I always like to go in the county because county is going to give me a bigger spectrum rather than just the metro area overall. So I always like to look at the entire county, so that way if there's any other opportunities out there, I definitely don't want to miss on those. So we have Chatham County, Chatham. English, it is my second language, so I do apologize if I pronounce it wrong, but let's go through here. So Chatham County, or AKA Savannah, Georgia, we have all of these cities. So first things first, part of the process, where's it at? Okay, cool. So the first process that we have is over here. So part of the CRM that I have available for you guys, I think I might have dropped the link. Part of the process is, especially if you're trying to wholesale or if you're trying to invest in the area, you definitely want to know your market. So I'm gonna walk you guys through how to analyze like any single market whatsoever. And then let's go through here and then type in Chatham County. So Chatham County, what I want to do first, step number one, is my market. Research my market, figure out. I've never been to Chatham. Like I said, Chatham County, Georgia. I've never been to Georgia overall, so I don't know this market whatsoever. Let's say you're in the same scenario. You're trying to analyze like a new market. What you like to do is Zillow, or even Redfin does this as well too, and they're already doing the homework for you. The reason why is Zillow and Redfin, they're both broker companies. So because they have their own real estate agents, that are, you have a Redfin agent or a Zillow agent as well too. They're registered with them. Sometimes some of them are third parties or they're individual agents from time to time, but you are able to use their own agents within their own companies as well too. So AKA makes them their own brokers. But what this is, Zillow is already doing the homework for you of analyzing the cities and counties and zip codes, everything for you. So what you do is scroll down past all of the properties, and then you go to head over here to nearby Chatham County county cities. You can go by the zip codes as well too, and then you're gonna press this show more button, and it's gonna show you all of the prices over here of properties in each single city. And what this is basically it's a collective data of both flip properties, aka retail properties, and also bad properties as well too. But it's giving you the potential ARV of an area. So if you're looking at Savannah homes, because that's our city that we selected for today randomly, so the Savannah homes on average they sell around $317,000. So if I'm looking for a property, definitely want to buy them around 50, 60 cents, maybe 40 cents on the dollar, and definitely try to flip it close to this. That's if it's doable. So what I'm doing with this information is, can my subject property that I'm looking for, can it sell for that $300,000 price point? And that's where you have to do your due diligence and basically confirm, can the property actually sell for that much? Can it be more or can it be less? Because again, it is a mix of both good properties, aka already fixed up and flipped properties, to bad properties, aka properties that have just be sitting in there that just need a lot of work as well too. And what I like to do is I like to bring this information to my CRM, paste all of these values over here. And the left side is basically my potential ARV, or again, what the property can potentially sell for. What I have to do is I need to confirm, can the property sell for that much? And then what this is on the right side is my potential offer. So this is depending on the strategy. So if my strategy is to fix and flip, then it's gonna give me a number or a price point that I should be looking for. So if properties in Savannah are selling for $317,000, I gotta look for properties that are selling for $222,000 and less. If I'm trying to make a fix and flip deal. If I'm trying to buy and hold, then the price point is going to change on my potential offer. As you guys see, it went up by $32,000 from there, just by, again, changing the strategy. But because right now I'm looking at the entire county, if I scroll down to the bottom, it's going to give me the average of it all. So the average of all the cities combined, they averagely sell around $428,000, and I gotta look for projects both buy and hold for properties less than $255,000. So now what I'm gonna be doing is I'm gonna set a price restriction into Zillow of $255,000, and let's see how many deals I'm gonna be able to find. And it went from 1,400 or 1,500 properties down to 200 properties overall in the entire county. Like I'm going to do that through Zillow, and also going to do it through Redfin as well too. Because both of them, the more platforms you have access to, that I can hold on. This is not Chatham County. Is this a whole different? Oh, I think I selected. I had selected. Oh, it is. What? Why is this different than the other one? Oh, this is North Carolina. Where's GA? There it is. My apologies. Both of them are going to give you different types of information, so that's the only thing that we definitely have to keep in mind. Sometimes you're going to come across the same properties from here. But let's go through here. Let's go very quick. Let me go back to Zillow. So first things first is let me deselect all of these selections. I'm looking only for houses at this point. And there you go, from 198 to 105. And the last thing I like to do, the last filter is I like to look for properties over 1,000 square feet. That's if they sell for 1,000 feet, 1,000 square feet. Once I start looking at what has sold, I'm going to be finding out what the property or what kind of properties sell the fastest. Is it properties close to like 800 square feet, 900, 1,000, 1,400, 2,000? You're going to be able to see what actually sells. And what I've noticed through analyzing like multiple markets is between, I'll say like 950 all the way up to like 1,400, 1,500. Between those ranges of sizes of properties, those are the ones that sell the most and sell the quickest overall in a lot of markets that I've analyzed. But from here, we have a good potential of 62 properties. So from 1,400 down to 200, down to 100, down to like 62. So we broke it down to available deals. And when people say there's no deals on market, here they are, 62 potential deals that I broke it down to just by analyzing my market, finding a price point, setting some specific filters like the properties and the size of the properties as well too. Not just from there, but also on another platform like Redfin. So I'm gonna select houses, and I'm gonna select properties again that are 1,000 square feet. And again, this is going to give me 33 homes. So I have 33 homes. Again, you are going to come across some of the same ones, and then you're going to come across different ones from both of them. But I have a good amount of potential ones over here. And the last thing I want to do is I want to look for the lowest to the highest. Properties, I'll tell you right now off the bat, if you find properties that are less than $50,000, it is going to be a nightmare property. And what I mean by nightmare property is going to be a full gut job property. There's been a fire, there's the roof is collapsing, there's termites, there's major issues on the foundation. So anything less than $50,000, it is definitely a nightmare. For some reason, 60, 70, $80,000 price points, you start getting some good deals. And sometimes some of them are definitely going to be a little bit fixed up, or some recently updated updates that have been done. For whatever reason, that $10,000 price point, it's a huge difference. But just giving you a warning, if you come across a property less than $50,000, unless you're a land developer and willing to demolish and start all over again, then by all means take advantage of those. But anything less than that, you're always going to be dealing with a huge headache. That's from my personal experience of seeing that. But over here we have good potentials. Now the thing is, where are they located? Because location definitely matters. And I want to stick very, very close to like the city, or inside of like the town. Like this one that is $75,000 is basically this first one. It's been sitting here for 50 days. That one's a little bit further out. So again, I want to look more at all of these dots over here overall. So looks like this one that has been sitting for 55 days. Let's analyze this one. This is going to be a definitely a fix and flip property. And the only thing so far, there's not a lot of pictures. So I don't know what's actually happening with the inside. Sometimes you can read the what the agent wrote at all whatsoever, but I want to see what pictures are, because again, I want to give you guys an example of this one is one when you come across properties that don't have any pictures at all, you definitely have to reach out to the agent, or you need to send somebody to inspect the property or check out the property for you. It's always best to do this under contract, so that way you can determine what the repairs will be. Because when it comes to that, it's again, it's you're playing it blind, and I'm not trying to play it blind. I want to look at something that has a good amount of properties. So these two will definitely be great deals off the bat, but again, I need to check out the inside. This one doesn't look like it's gonna have any pictures at all. So let me look for some project properties. And right now we're getting close to like $140,000. These are going to be more expensive type of properties, but let's see what we're dealing with. Okay, so again, some of them can definitely be still a deal. Like over here. Awesome. So here we got a pretty good project. So off the bat, let me expand this. Um, some landscaping, very minimal stuff as well too. Definitely have to update this. Overall, we definitely have to do some painting, some walls, some flooring, some windows, kitchen, electricity or the wiring. I don't know how old that thing is. That might have to like update it. Just by seeing these panels on the walls, definitely tells me that this probably is a 1960s home, 1940s home. What else? What else does it need? Bathroom for sure. I'll definitely have to update that water heater. Um, there you go. There's the bathroom, bathrooms, now walk-in shower. Awesome. So this is definitely going to be one of those projects that we definitely have to do some analysis on. So let's go through the numbers and let's see where it makes sense. Where it makes sense like the most. So this will be more of those the type of project property that needs average repairs, because again, talking about the floors, the windows, painting, bathroom, um, kitchen, the water heater, maybe some electrical as well too, and very minimal on the landscaping, and then paint outside as well too. The other thing that I like to do is when I'm looking at properties, I always like to do street viewer as well too. I always want to check out the neighborhood, so that way I can tell like, has there been any other projects in the area, or do I see like moving trucks, or just I'm looking for anything like any other projects that are happening in the area, so I can determine like, is there a lot of activity happening in this neighborhood, or there's no activity at all whatsoever. And what kind of houses are there here? Are they going to be all single family, or like over here we're gonna have a duplex type of property? So this will maybe we can convert the property into a duplex as well too. So it's always good to match up the property to what's actually happening out there. Again, depending on how much work does it need and what's actually happening. And just by looking at this entire street, I see all the homes are very similar. So these are going to be definitely multifamily type of properties over here on just that street alone. And then right over here, we start getting into like those single family homes. Um, and so this is a mix of more of a rental type of property, which again, this property can definitely be more feasible, more attractive to somebody who's willing to buy and hold, just because an entire street is already buy and hold on that side at all whatsoever. And I don't know how long this road is at all. What do we have? A church over here, possibly, or a middle school, elementary school, a church. What's over here? Industrial. And it looks like we have some industrial business there. All right, cool. I just want to do that really quick so I can, again, I'm trying to analyze like the entire neighborhood overall. I mean, just get an understanding and what else is around some of these streets as well too. And then here it is. So this is a great example of sticking to the same neighborhood because one, we have this major road, Bay Street. This is good. It's an off ramp to this freeway. So this is going to be a heavy traffic road where, again, I'm probably going to get some comps or some properties listed over here that have been for sale or have sold in the past. And I can use those comps, but because of this major road, I'll definitely have to make some price adjustments. Right behind the neighborhood, there's the Savannah River, so there's nothing to comp over there. To this side, there's a train station as well too. Same thing over here, a train station. So this is going to be my neighborhood over here. But again, anything over on the other side of Bay Street, I definitely have to make some price adjustments because of that major freeway traffic road that I have, again, closing out the neighborhood overall. So let me duplicate this and let me start analyzing the property in terms of numbers because this is where we have to start doing some numbers overall. So the property is listed for $130,000. The potential based on what city is it on? It's in Savannah. Okay, cool. Yeah. So Savannah, Georgia properties can sell for potentially for 317. So now I gotta confirm, can this subject property that I'm looking, can it sell for $317,000? That's a question of if. So I have to play that game and let's see what I'm able to find. So this is my duplicate. Let me go back here. Let me look at what properties are selling right now. Let me take away the restrictions of prices because again, I want to look at properties that have been selling and let me start setting some filters. So the property square footage is 1479. So again, I'm gonna go plus or minus 300. So plus 300, this is gonna be basically 1800 or 1750. It lets me. And then I can't do 1100. That's I'm gonna stick to like 1,000 and see what I'm able to find. We have one comp over here across the freeway. Definitely can't pull that one. It's just that freeway or the off ramp is definitely going to be a nightmare overall. So far now let me look for properties by square feet because I want to see. So the first one is that 1600. Then we have ours. We have this 1326 property selling for 255. That's the highest price property so far. So let's look at the condition of this one because this could be one of the comps so far. Off the bat is definitely a strong one because brand new paint, windows, bathroom updated, vanity, as well too, flooring, LVP flooring. Um, okay, they did very minimal stuff on. So it looks like this was a rental type of property, possibly. Let's see what else. Again, we gotta bring a new electrical panel. This is kind of weird how this is like that, but hey, I didn't do this. Kitchen, they did a very rental style, a type of kitchen, not bad. Let's see. Again, windows, flooring. They have some AC units in there, bathroom paint. Outside, they didn't do as much. So again, this looks very much like a rental property overall. But this is selling for 255. Okay, so let me put in some numbers on the square footage, 1479. Roughly how much in repairs can this property need? Again, based on the repairs, going back to the average price points, the average will be 25 to $40 per square foot. Based on the pictures, I'll be closer to, I'll be like in the middle. I'm more like 35, honestly. 30, 35. I'm gonna go with $35 per square foot. Doesn't look like it has a basement, so no basement. So I'm gonna go with $35 per square foot. There's no basement, so roughly around 52,000 dollars worth of repairs. And then I'll at least want to make my 30%, 20% on this deal. Again, if I'm trying to fix and flip this, so the property needs to sell for $233,000 for me to make my 20%. Do the $52,000 of repairs, possible repairs. Again, it could be plus, it could be minus. Because if we're trying to we're trying to hold this, then we can spend a lot less, depending on what kind of comps I'm pulling. So far, our first comp that I'm pulling is definitely one that it's a rental property. But let's continue going through here. I'm gonna open this in a new tab so I can leave that open. Now, like I was mentioning, I know I was gonna get some comps over here on this side, and I'm noticing a pattern. I'm not sure if you guys are noticing as well too, but I'm getting 225, 255, 255 as well too. Again, my market was telling me 317, but just by looking, simply looking at the properties that are for sale at the moment, a lot of these price points are between 225 and 255. And that's, to me, that's common sense of what I'm already foreseeing how much the property can sell for. But if I pull the price per square feet, then that's the biggest thing that's going to happen with this. It's going to give me a whole different number. Um, this looks like it's a brand new 2023 built. Part of the I'm not sure if you guys did notice, part of the comps is stick to the same year, so plus or minus 10 years of a difference. So our subject property is, let's see what kind of year we're talking. 1950s home. What about this one? 1956. So that's a strong one. This one, not a strong one. It is under contract at the moment though. But off the bat, if I show the pictures and what it looks like inside, they don't have anything because it's still probably building. So they're just showing you what the potentials are. But that's selling for 255. This one, same thing. This is a 2023, 2024 build. So this is giving me a good signal that the whole area is really good in terms of like what's happening in the overall in the neighborhoods. There's some brand new constructions in both sides, on this side and on this side. So if there's some land opportunities over here, I'll definitely want to take advantage of those before some of these contracting properties or investors come into that. Um, let's see this. This is a 2004. I can't use that. And then this is a 1960s, but this is selling for 215. But these are the ones that are for sale. Let me see, by changing this button, let me see what's under contract, if there's anything under contract. And there's nothing under contract at the moment. So my last hope is to look at what's for sale or what has sold in the last 6 months overall. And let me see where these price points are going to be at. So first things first, let me look at the newest ones. Okay. Come on. So 255 is this one. This looks like a 2024 build. Yeah, this is going to be a 2024 build. So this sold in May 9th. So about 5 days ago. But this is a 20, yeah, it's a 2024 build. So I can't use that one. Again, I gotta look for 19 from 1950 to 1960 down to like 1940 type of homes. This one sold in December, 220. Um, okay, better condition, 6 bathrooms. I don't know if that's right at all whatsoever. This sold on March for 140. This sold right now in March for 140. What's the square footage? 1,000 square feet. It is pushing it. I gotta stick to 1,100, so I can't use that one. And again, most of the comps are coming from this neighborhood at all, which again, I'm not really liking. This is same thing, probably a 2020. This is probably a 2022 build. Oh, 2008. Okay. Um, so this sold for 220 back in January. Great condition. Again, flooring, kitchen, lighting, fans, doors, windows. paint. So again, the entire 9 yards. So I don't want to go through the entire pictures outside, and very minimal on the landscaping, and put a brand new fence as well too. Um, the only thing it's getting really small as well too. What's the price per square foot on this? 220 divided by 1098. That's putting me at $200 per square foot, because that's the next thing I gotta look for. I gotta look for comps. So this one sold for 170, or it's for sale for 170. Next one is 200. So let me close this out. 200, but honestly, I'll say 215. I mean 210. Honestly, 210 divided by 1098. Yeah, 191 is gonna be my price per square feet. 191. Just because again, it is in a whole different, so I dropped it by $10,000 on that price point. This sold in January. Doesn't look like it has a lot of pictures. This sold in March for 120. Again, this looks like a rental property. Oh, okay. Looks like the tenants might have done something and just definitely need some work. So not, but again, too small of a property. So all these homes are really like on the 1100. And then again, this is what I tell you guys to pay attention to see what sells. What sells in the market. If all of them that I'm coming across are selling like 1,000, 1,100, maybe like 1,200, and occasionally you have like your 1,400, then that's telling you what's, look, another 1,000, 1,100 square foot home, 1,100 square foot home, 1136, 1,000, 1074. So I gotta look for properties that sell. So if all this neighborhood overall is just 1,000 square feet, nothing more than 12, nothing more than like 1150, it can sell quick. And what about the new construction homes? If we go back to the new construction homes, if we look at what size of the square footage they are, I'm sure they're gonna be like 1,100 square feet homes. This one, February 2023. I mean, 2024, it sold for a little bit more, but it's 1,400 square, our probably like our second one, or 1,400 square feet home. This is a well-maintained property, so this is one of those that needs very minimal stuff. Again, it is in a whole different street, so I'm gonna go base it on minus $10,000. So 224 divided by 1,468 on the square footage, so 152. So $152 per square foot. So my subject property at a square footage of 1479. By the time it gets fixed up and flipped up in the market, let's say 2 months, 3 months, or that fixed up 2 months, get sells in like in the market, probably another 2 months, a total 4 to 5 months. We're talking now close to whatever, May. So we're close now talking about September. September, October is when this property can definitely sell for, depending on how the rates are on that time. Well, again, we can push it, but the thing is, it's always good to like over budget it, and then slowly we have to make some price adjustments depending on how the market is around September and October. So we can list the property in the future for $250,000. If the market gets better, then we can push it for more. If again, once we start getting fixed up, and see what kind of appraisal we can get in the future. And this price point is basically how much properties are selling for right now. If you go back to what's active at the moment, again, we were noticing that the price points on these properties were selling around 225 to like 250. So our ARV, based on what the comps that I pulled, both what's available, what has sold, as well too. We didn't find anything under contract at the moment, except for one, but that brand new contract one is on a 2024 built home, which what's the square footage? 1,299. So you see how these new construction homes are starting to like push up like on the square footage. We're not getting closer to like 1,200 on the square footage. That's what a lot of these construction guys are trying to do, so that way they can push up the price on these properties as well too. Which whenever they sell, then what's gonna do is, this is how the market is going to react. A lot of these prices or future properties are going to be listing closer to that price point. So our price point is 250. It's definitely doable. It makes really sense. Now, when it comes to like fixing a flipper or finding an investor, this is where an investor will line up our deal. Our property is listed for 130. So if it's listed for 130, some investors are willing to pay more than 130, so all the way up to 138, and then someone's going to be very aggressive and push it down to like 123. So not a big difference on the price point. It's going to be like 5% less than what the asking price is. Of course, as a wholesaler, you definitely want to push more, so that way you can get more out of it, more out of your wholesale deal. And then our investors are still going to make their profit, are their 20%, which they're going to be making roughly $40,000. Again, it's going to be a plus or minus game out of that. And to give you guys a perspective of it, there's a calculator in the CRM too, where if we go down to like the numbers, let's see if it actually makes sense. So step number one, how much is the seller asking? The seller is asking $130,000. We find our ARV. Our ARV is $250,000. So our property is already listed at 52 cents on the dollar. So that's again ARV pricing versus the ARV, it's at 52 cents on the dollar. That's a great potential off the bat. And if we look at the numbers, again, we're going to dive into it really quick. We estimated the property needs $52,000 worth of repairs. We're trying to fix and flip, so it's going to be times 70%. Here's our price points, our ranges of how much our offer should be or how much investors are willing to put into it. So now as a wholesaler, you definitely want to push more. We can definitely push this a little bit more. How long has this property been sitting on the market for? Only 8 days. So even if our offer gets rejected, you can play the most killer threatening skill of it all is play the patience game. See how long this property can definitely list for, because it is a big property. It's a 1,400 square foot property. We noticed based on our research, we noticed that 1,100 up to 1,200 square feet properties sell a lot quicker than 1,400 square foot homes. So we can definitely play the patience game on that aspect. Now, let's say I play the patience game and I'm able to get this property under contract for $115,000. I can definitely push it for like 100, if anything. Now I'm getting and try to resell to an investor for again a $10,000 wholesale fee out of it. So I'll sell it to them for $125,000 against a $10,000 wholesale fee. They pay the closing costs for both myself and the seller. They do the repairs. So their all-in investment is $188,500. Now, if they go through the process of how much money they're going to be making, the property sells for $250,000. The agent fee to sell the property, closing costs again. They're all in profit is 227, but how much they put into the deal was again $188,500, which is an actual profit of $39,000. Again, this whole section right over here. It's a plus or minus game because the property can sell for more. The repairs could be less as well too. If we can drive this price down for more for our sake as well too, then that's even better as well too. But so far, our investor can definitely make like a deal. It's just let's see if they're satisfied with that $39,000 price point or an ROI of 20%, which it should be perfectly fine at all whatsoever. And what this section is right over here is basically breaks down the 70%. So I mean the 30% difference. So again, 100 minus 30 equals 70. So that 30% it concludes of 20% being profit and 10% being closing costs. But this number is the actual one that matters in terms of profit because it depends on how much the investor put into like the deal. So $39,000 when they invested 188, some of them will definitely be satisfied. Some of them like to be more aggressive and they want more. Who doesn't want more? Of course, that's perfectly fine. There's no problem. There's no issue with that. But again, somebody is definitely interested on that. But we also noticed that somebody is also willing to pay a little bit more for this deal. There's always someone willing to pay more. So at the end of the day, this makes really sense for it. If I want to build a relationship with the end buyer, again, we can negotiate on the price point. And this is what I mean by this is assignment of sale. So this is when you get the property of the contract, you're not promoting the property because you're not a real estate agent. You're promoting the sale of assignment. And then this listed up whatever makes most sense for you. If you want to do all your wholesale deals at $10,000, but again, this is a property that is on market. So if it's off market, then it's really an open game. But again, you got to give the perspective of where would the investor stand? How much can the property sell? How much are they going to be all in? And what's going to be their profit after their all in number? That's what they really care about. And that's what I would care about as well, too. $39,000. It's a 1,400 square foot home, so I'm playing the risk of playing a little bit more time into it, probably 6 months of getting this property sold, and this is going to be around September and October a time frame. So it is going to be a little bit more risky type of investment, and if I have to make some adjustments on this price point. But what I do like about this, and it's my biggest hope, is this 2024 built brand new built home. This is what's going to help out the property, especially around that time of driving the price, because this is already contingent. This is already under contract. This project that is happening over here. So this is so far a great opportunity in terms of like the area, because there's new construction happening and I already know how much can properties sell for over here. So if I want to look for land on this area, if there happens to be any, or if there's no land available, I can just try to look to see if there's any lands available and do the same thing. Try to build a brand new home and then try to make that happen as well too. Um, and make more money out of that. But this is where the numbers will lie overall in this analysis. Somebody had requested, can we look at cities in Alabama? Uh, yeah, what cities in Alabama? I mean, I know Birmingham, Alabama. What are the cities in Alabama do we have? If anybody's requesting another analysis, but hopefully that's able to give you guys like an insight of how to analyze both the deal. Well, let's go make it a deal. We analyze the market. We find an opportunity. We notice there's other projects happening in the area, so there's good potential in the future for our area overall. And additionally, too, again, it does make sense on this deal for somebody to make like their profit is we come across a buyer that is willing to accept this deal and they're satisfied with making $40,000 in 6 months time frame on this. Well, plus the time it takes us to get the property and the contract and all that. But that's pretty much that analysis from there. If you guys have any questions, again, you can drop the questions on the chat or actually you guys should be able to unmute yourselves. I don't know why this thing is doing that. Or if you want to analyze a market in a city in Alabama, I don't know what city you will want to get analyzed from there, but I'll be open to analyze something else really quick. Let's see. What cities? Cities in Alabama. Let's look for cities. I like to look for cities over 100K. Let's do Montgomery, Alabama. Let's analyze that. Uh, Montgomery County. Is in what county? What county is this? Capital Black. In what city? In what county? Montgomery. Okay, so that makes it easy. So we're gonna do another analysis. If you guys are okay with us doing Montgomery, Alabama. Montgomery, Alabama. All right, let's reset all this. Again, it's a brand new market. Oh, what did I do? Montgomery County. Here we go. Whoa. So we're gonna do this all over again. Go back to my market. So first, step one is always markets. Step two, start having your relationship with buyers, contractors, title companies, other wholesalers. The list goes on and on of who it is. Then of course, start looking for some properties. Start putting your properties and start analyzing like your properties. But before you start analyzing, here's a major issue that I come across a lot of wholesalers. Is the time that I just spent analyzing this deal, right? I spent like what, half an hour, 25 minutes, whatever it is that I spent time analyzing this deal. Sometimes we go through the process of, okay, here's an opportunity. Let me analyze it really quick. You analyze it, you spend your time on it. All right, cool. I found my numbers. And of course, it really has to make sense as well too. When I notice especially when it comes to sellers or and also agents, those are two different conversations that you're gonna have. But especially with this property, it was listed on market is you gotta talk with the agent. So as soon as you find out, like you come up with an opportunity, you have a property that you want to reach out to see if there's interest. It's always best to get on the phone because at the end of the day, sometimes some sellers are fixed on the price. So if the property is selling for $130,000, they don't want to go any lower than that. They're not willing to go anything lower than that at all whatsoever. They're stern, they're firm into that price point. So you're doing all this work, spending 30 minutes analyzing. All right, cool. I got my number. Now let me submit my offer. Oh crap, it got rejected. I just spent 30 minutes just analyzing just one property. I would rather spend 30 minutes calling as many people and then finding out why they want to sell. Because if you don't find out why, and that's pretty much the whole foundation to everything is why, and I have it right here as part of my notes. Step number one, get the asking price, aka, especially if you're reaching out to off-market sellers, is how much do you want for this property? All right, cool. If you were to sell, depending on the property, if they're living in the property, it's like, well, do you have somewhere else to live? Like, do you have somewhere else to go? Like, what would you do with this money? Like, what's your next step? Like, have you thought about that next step at all or whatsoever? And especially when it comes to sellers or homeowners that are living in that property, and they have to go through the entire process, and that entire process is definitely something they have to like really think about. So they're definitely going to correlate the entire process, the amount of time they lived in the property, the entire next 30 days process of them moving out and vacating the property, and also they all that time they have to match it up to a number that really makes sense to them. So if I don't find out why they want to sell the property, what's the motivation of like moving on forward from this property that they don't want to deal with this anymore, then it's really just you're wasting your time of just analyzing properties. If you're coming across a property, analyzing, again, it's always best just reach out, get on the phone, get on the text message, get on the email, and just start getting out there to find out why people want to sell. Because again, spending 30 minutes analyzing just one deal, you could spend 30 minutes reaching out to 15 to 20 people and then probably just getting more answers and figure out like who's actually really motivated and who's not really motivated on getting the property sold overall. So if you have like a list of like 1,000 people to reach out to, and then you're spending 30 minutes, it's gonna take you a long time to get those 1,000 people. And then not only that, but also you're playing the competition game where somebody else is calling that person. So if your person is number 10 on your list and you're barely a step barely calling the first one or analyzing the very first one, by the time you get to number 10, somebody else already took that opportunity out of your hands. So this business in terms of real estate is is mainly all about volume. So you got to get the volume out there. So less time analyzing. So the time that you should be analyzing is get on the phone with them as well too. If you have like or somebody else like a friend and you kind of teach them along the way, it's you can both do it along the way as well too. But it's just overall spend the time getting out there, getting in front of people rather than just focusing on analyzing every single deal, because I don't want you guys to go through this process like I just did. This is a live thing where we analyze for 30 minutes one property. I found the entire neighborhood cool, but now it's like, and I can target all those 1,000, 1,200 square foot homes and lower, but I would rather spend the time collecting all those 1,200 data and just getting in front of people off the bat from there. So just giving you guys like a big tip, something major, just because again, it's something big that really happens very often not. So let me go back to Montgomery, Alabama to see if we can find like another deal over here. And again, same thing. I've got to go through a new market, go through the entire process of analyzing this. So I'm gonna go through Zillow, pass all of the properties, and let me analyze this data over here, see what my market is telling me. I'm gonna copy all this information, go back to my markets, CRM. I'm gonna paste all of these values. And let's see what I'm able to get. If I'm trying to fix and flip, let me go here to the bottom. I got to look for properties less than $115,000. All right, let's go through it and let's see how many deals we're able to find. Let me just select all that. Select for houses, price point, $115,000 from It went down to 103 properties. And again, let's start looking for properties at 1,000 square feet and higher, and down to 80 properties. Awesome. That's the entire county as well too. That's amazing. What else am I missing? That's pretty much it. Now let's go through price point of low to high, and let's see what kind of deals. See 16,000, 20,000. These are the properties that I'm talking about that are going to be not. Oh, this property is back again. I feel like I've seen this property, unless I'm tripping. This is deja vu over here. Oh no, this is a whole different property. Um, but you see these properties less than 100,000, less than $50,000. These are going to be the nightmare ones. Again, occasionally you might come across a good one that is like decent. Like this one looks very decent overall, but it's just only one freaking picture in here. Looking for a project, here's your lucky day. Those are bad words right there. Looking for a project, so it looks like a nightmare. It's happening inside 400 days. 400, it's been listed for on here for over a whole year. That's crazy. Price cut. I like price cuts. Oh, okay. Here we go. Here's a decent project. This is not too bad at all. The outside, we can definitely up to the outside. Inside, not a nightmare at all whatsoever. Like I said, it's just always be attentive. But this is Alabama, so I definitely expect this for the properties to be a little bit less. Um, it definitely needs its updates as well too. That's a huge couch. Okay. Um, let's go through it. So definitely needs, let's start listing it out. Flooring, painting, some windows, bathroom, kitchen. Um, what else? What else do we need over here? Definitely need like the outside as well too. And I think that's it. So that's pretty much it. That's more on the average side as well too. 1260 in terms of the square footage. So let's go back to the top. $39,000. Wow, that's crazy. If you do like 5%, 10%, if you're like a first-time home buyer and you do an FHA loan on this, oh man, look how much you need. You only need 1396 to buy this property. First-time home buyer plus closing costs, which will be another 3%. So 39,900 times 6%. You're gonna need $2,400. That's crazy. And then you can probably rent this property out as well too. That's crazy. That is so wild. That's basically a tax return right there for somebody. But let's go through here. What's square footage? 14 what? Oh, where did it go? Oh, this one right here. What's the square footage? 14, oh, 1260. Square footage is 1260. Great. Closing costs, awesome. Repairs, we're talking about $25 to $40 per square foot. I'm gonna go with very minimal. So yeah, definitely $38,000. We'll definitely do this. 20%. The property or the needs to resell for $96,000. This is in Montgomery. This is in the Montgomery city. Yes, it is. Montgomery properties can sell for 142, possibly. We have to do our due diligence and find that out. And I think this is our subject property right here. Yes. Cool. So it looks like we're in Highland Park. Let me start filtering it down to look for some comps. First, let me look what's available. What's the square footage? 1260. All right. So 1260 plus or minus 300. So 1500 minus 300, 900. So there's no 900. So I have to go down to like 750. And our subject property is right on a major road. Okay. Here's the thing. Whenever you come across properties that are sitting right in front of a major road, automatically 10%. Deduct 10% of whatever the property is worth. So this is going to be minus, what is it, $900? Minus 10%. I can't do simple math. Minus $4,000. You see, I'm all over the place right now. Minus $4,000. So automatically, that's already a $4,000 price, $3,500 price point, just by sitting in this major road. And how do I know it's sitting on the major road? Well, let's go through Street Viewer. How about that? Let's. Oh, it doesn't even have it over here. Satellite lot lines. Oh, it doesn't even let me do it. Here, I'm gonna do it this way then. Let me get the address, and then let me go through Redfin. Redfin, I love it so much because it does let me do Street Viewer every single time. And let's drop our guy on this road. Let's check it out. Oh, oh, there it is. There's the trash truck as well too. How many cars am I seeing? Yeah, this is not a double yellow line road, but it looks like it's a major road for it. But there's not a lot of traffic. This is actually interesting. This is Alabama, I guess. Let me look down the street. So it is the road itself. It is a double yellow line road, but it splits up over here. And the reason they do this is because you're getting more into like residential homes. So I think this side of the road is more on the busier side. I can tell by this light over here. There's a lot of congestion. There's a lot of traffic flowing here. So it does have its flow of traffic, but just mainly in this section because it looks like this again, this other road is the main one. So what is this? Panama Street? Panama Street is like one of the busier ones. So I'm okay with it. So actually it's perfectly fine. I was actually scared for a minute. But because it is sitting right in front of that though, it's still considered a major road as well too, because you can see the reason they do this, a lot of cities is because to like slow down traffic, or maybe there's a lot of speeding from time to time over here. So they split it up so that way they can reduce the speed. Maybe because there has to be like a school or something around this area, or there's just like a lot of homes over here as well too, so they make it residential. But that's what it is. You see Union Street, it's another road, so we can stick to our neighborhood over here. But now let's look for some comps. Let me look for properties that are pending or in the contract. And I'm looking for properties close to like 1,300, 1,200. So nothing under contract. Let me see all these properties that are out here. How much are they going for? And I'm having some technical issues with this. Come on, Zillow. Sorry, guys. Let me refresh this. Looks like our internet slowed down a little bit right now. Come on. Zillow. Thank you. Come on, come on, come on. Don't do me dirty like that. Don't do me dirty. I spent 6 hours, 8 hours on you all the time. Like, why? Why? All right, cool. Let's see here. 1,000 square feet. I'm just gonna go look through the pictures. Oh, okay. That's really good. $80,000. How much do I need? 140? 142. Okay. So I'm just gonna look. I'm looking for anything over $100,000. 1,260. Oh, under contract? 1,260 is a square footage. 1,260. 1928. 1940. Man, this thing is pushing it. 12 years. You know what? I can still play with it. I can still play with it. 12 years of a difference. $119,000 though. Damn. They didn't do anything major with the flooring. They just did painting, kitchen doors. They just changed like the hinges as well too. They kept. Oh no, I think they updated the doors as well too. Windows, bathroom, very minimal stuff as well too. But 1,260. Okay, I'll use this one as a comp. I'm not gonna make again. I'm not gonna, and this is under contract at the moment. Under contract, same square footage, 12 years of a difference. I'm perfectly okay with it. And the reason I'm not gonna be pulling it, again, in terms of like that price point, because it's across of this major road. But again, this is done for the purpose of the residential. So this is not one of the major roads. These two and street and what was it? There's another street up. So basically all of these exit ramps are gonna be like the main ones, but Hall Street as well too. Looks like the ones going north are the ones that are gonna be like the major roads, not this one over here at all whatsoever. They want to get it closer. There's probably gonna be some flow of traffic from time to time, but it's not a heavy traffic major road. And the trash can truck is just it's trash can because all these cities don't have all these homes. They don't have uh what's it called? It's not really closed down to like a neighborhood. It's really hard for me to explain that. But if you guys get my sense of lingo. But yeah, I'm not gonna be doing a price reduction on this one, and this one's under contract at the moment. So let me pull this one. Oh, I'm gonna leave it as that. So that's one comp. Oh, what's the square footage? The price per square foot? $94. Okay, so let me go through my numbers. So off the bat, we got 94. Okay. Yeah, my property needs to sell for $96,000. For our investor to make their deal happening, I want to see how much I'm able to get on a contract as well too. This is for 39. Again, I can still push it for a little bit more, maybe 20, 25. That's what I'm guessing it should definitely be under contract. And then just do like a small price. It's going to be a very small wholesale fee as well too, because it's already priced very low. Um, let's see. I'm just looking for like updated properties or anything else that is under contract at the moment. Because again, I want to see what kind of activity is happening over here at all. $90,000. Here's another good one. 968. It's right there at the price point of 300. $90,000. Again, great flooring, paint, kitchen. Looks like the flooring was probably like the older version. No, they kept the older version. They didn't do anything much on that. But the way you do this is just quick sand, very light sanding, put a new finish. That's it, done. Very minimal work on that. But overall, just great home as well too. So this is another comp, 968. It's still within that price point because again, 1260 minus 300, it's gonna be 960. So it's right within our square footage and it's $93 per square foot. So another 93. And this is for sale at the moment. Let me look for something that has actually sold. Um, and sold in the last 6 months. Let's see. Again, base, and this is the other thing too. The reason I was saying like I can get this on contract for 20, 25,000. All I gotta look for is for one to see how much has it sold for. This is property sold for $22,000. Nothing too crazy. This one sold for 8,000. It's a little bit smaller. On the same street, December 28th, 1362, $10,000 property. And then we have this other one, 35, 12,000 for 1,000. Okay. So I'm not seeing any fixed up properties and flipped. What's up with this? This we have a property management. So this is being for rent. So now we get a bit of both. We get asking price and rental price. So it looks like a 3-1 to 100 square foot home can rent out for 1150. So we can reduce the project amount of spending in terms of repairs as well too, and bring it up to rentals, rent a rental price point. And then this was listed in the past for $117,000, but that was in November of last year that it sold for. So 117 by 10, 1232. And it's still within our neighborhood as well too. 117 divided by 1232. It's at $94 per square foot. So we're right on the spot at the 90s. So yeah, our property can sell for $118,000. That's our ARV. Again, 2 to 3 months. We can reduce the amount of repairs. Again, based on the rental, we can rent it out as we can make it a rental as well too. So our price point, and this is a crazy thing, just based on those numbers that we got, all of them are really close to each other. Let's say I want to play it safe, like let's push it down to like 90. How much would it be if we were to sell it for like $90,000? Our worst case scenario, $113,000, so $5,000 less. So the property selling for $39,000. Somebody's willing to overpaid for this property from 41 to like $52,000. Again, the property itself internally, it's nothing too bad. It is not a bad deal at all whatsoever. The comps, we got a mix of everything, and it's just the price point. It's right on the spot. It's below what we actually need at all whatsoever. So we can still get a deal out of this for even more. And then for somebody to make a $20,000 wholesale deal, I mean, investor to make if they want to flip it. But my sense is this is a rental opportunity. Um, which I can go through like the rentals if you guys would like me to, as well to how to analyze like the rental. But this is still an amazing deal overall. Let me go through my numbers to confirm. Property selling for 39,900. ARV, worst case scenario, $113,000. Repairs, we estimated repairs to be what, $38,000. Again, it can be less, honestly, in my opinion. Just because of the rental stuff. It can be $25,000. Keep it as a rental. Um, we let's see, we can push it for like $20,000 and then reassign it for 25 against like probably maybe 28, um, $28,000 for an end buyer, and they still make the property resales for 113, agent closing. Their profit is 102 minus their all-in investment of $68,000. They make $34,000. They make half of the return out of investing $68,000 in a matter of what, 6 months, a 50% return in 6 months, maybe less as well too, because the repairs don't have to be very crazy. But honestly, this is a more of a buy and hold type of property. And whoever's investing in this, or if somebody wants to take this for their own investment, go ahead and take it, because that's a great deal right there. But let me go through the numbers as well too, in terms of like doing a rental side. So let me go through the rental. If you guys are interested, by all means, you don't have to stay by this, but if you guys want to learn, this is the way it will go in terms of rental. So the way rental works is you get the property. Honestly, first time, I'm gonna do a perspective of a first time home buyer. Somebody who wants to make their first time investment into this property as well too, because you can definitely can. The only thing you just have to bring the capital for it. The way property works is you get the property in the contract, you probably get a finance, if anything. If you have the cash, that 39,000 cash, honestly, this is a great opportunity. Then there's the rent as well too, the rental, and then the expenses. And then of course, let's go to break down the analysis really quick. So the way this will go is 39,900. Ooh, an extra zero. Nope. 39,900. Let's go with the first time home buyer of 3.5%. I'm gonna go with like 7% interest rate, 30-year term, closing costs, 5%, should be less, honestly. Closing costs 4%, up to 4%. So the initial investment a first-time home buyer needs is close to like $3,000. That's down payment and closing costs as well too. Now the property is a 3-2 property. It's a 2-2, 2-2. 2-2, but I'm gonna go based on this one, how much you can rent. Um, 0, 0 on the first one bedroom. It's a 2-2. But so I'm gonna go right here on the 2-2 property. You can rent out for 1050. So much it would be? Oh, 1150. 1150 is the rental. Putting in here. I can try to see if I can get more out of it. Maybe a garage. Does it have a garage? I don't think it did. No, it doesn't have a garage at all. Did it have a back shed or anything like that? I don't even think they showed the backyard. Okay, so no extra income in terms of like garage, laundry, or anything like that, whatsoever. So my monthly rent is 1150, or AKA $13,800 for the entire year. Here's two things. This will be it'll be 40%. So I live in California. If I were to invest this myself, I'm out of state. I'll have a property management in place. If I happen to be living in the area, or if I want to manage my own properties or my own investments, then I can cut it down to like 30%. Because I'm out of state, it'll be 40% on the expenses. So my expenses are going to be $5,520. Or if I wanted to, I can break down every single dollar that I can reach out to like multiple property managements to ask for quotes so I can get an estimate of how much they will charge, this and that, maintenance, everything. The property doesn't need like a lot of stuff. I don't know what the backyard looks like as well too. But again, I can break down everything, but I'm just gonna play it safe and go based on my expenses percentage for right now, which my expenses are $5,000. So the way this goes is you have your income, then you could have your expenses. You subtract those two, so 13,000 minus $5,000 is going to be a net income of $8,280, or AKA $600.90 per month. That's again art including everything. But now the biggest, because I am financing this property, I did a FHA loan this property. The last thing I have to consider, it's my final expense, is going to be this payment right over here, this monthly payment, or what we like to call it in our in the rental investing arsenals, is called debt service. Debt service is the same thing as a mortgage. So we have to subtract our net income. We have to subtract the debt service or mortgage from our net operating income. So the 3,000, the $8,000 and 280 minus the $3,000 of mortgage for the entire year. By the way, this property is cash flowing us positively, awesome, which I had a feeling, for $5,206, which is a total cash flow of 433. But of course, this property does need some updates as well too. So we have to be bringing in again $30,000 more into it. So that's going to make some adjustments on our cash flow, but the property can still rent as well too. And here's the biggest thing overall. Um, the cap rate. Oh, the property's cap rate is around 20%, based on the price point. So 20% puts it listed at that. I can push it up a little bit more just because again, I still have to do repairs. So I'll say I'll try to push it towards like the max that I have the calculator, because I didn't expect the cap rate for this to be really significantly. Where the property I can get on the contract again for $30,000, even more. That's gonna be even better because the lower that I have the price point on it, then the more money it's gonna bring to me at the end of the day. So let's say we get this for $30,000. So just a small difference of $9,000, as well too, is gonna make a huge difference on our income is gonna stay fixed. The only thing that's gonna make a difference is gonna be on that mortgage. It's gonna bring us more money into like our mortgage as well too. So honestly, this is a project that can bring a huge amount of potential. But again, you have to bring in those 25 to like $35,000 worth of repairs. So you are going to be investing more than just that $2,000, but that's something major. Now, if you're an investor who has the money up front, like, you know what, I have the $40,000 available right now. I don't have to worry about any payments at all, whatsoever. The only thing you have to worry about is closing costs. Closing costs are going to be right there off the bat for you. Again, the lower you get the property under contract for, the better it will be. So you get on the contract for $30,000. It brings you $1,150 per month. Your expenses again are going to stay the same. This property, there's no mortgage on it, but this property is cash flowing you $8,000 each single month, each single year, which is a total of $690 per month. Out of state, you don't have to manage this. Somebody else is managing it for you. You have one property bringing you $8,000 each single year. And what you do, and then again, you have to spend some money to like update it as well too. But this is to bring it up to those standards. Um, just like this one right over here. Very minimal stuff that you have to do. Just the painting and the flooring, and just doing updates to like the kitchen and keeping it very minimal are gonna do a huge favor for you. But that's that's a deal right there, honestly. So that's a quick rental analysis for you, to kind of help you out understand how rentals go. Again, it goes based on price point versus the income and expenses. and everything else is gonna be analyzed. And if the property cash flow is positive, cool. If it cash flow is negative, it's a tax write-off. I mean, regardless, both routes are a tax write-off at the end of the day, but that's a deal. So this is a freaking deal off the bat for both fixing and flipping and buying and holding. But honestly, this is a more of a buy and hold, in my opinion, just because again, it's in really in good shape already off the bat. You don't have to do too much at all whatsoever. And I'm done ranting, but any investor who's watching this, take advantage of that freaking deal right there, honestly. So I'm gonna leave it open for some Q&A if you guys have some questions. I know we did go over and did take you guys a lot of the time today, but hopefully you guys are able to learn a little bit more of the insights in terms of like real estate investing, real estate wholesaling, real estate analyzing, and some of my own rants and experiences, but that's what I'm here for. So you guys are able to mute yourselves, or if you have any questions or anything, you can drop it in the chat. But this is gonna be the Q&A time. If you guys happen to have like any questions at all whatsoever, if there's any questions at all. No, oh, let me pull the chat. No questions, nothing, nobody. If there's no questions, I really appreciate you guys coming in today. Um, what is this, episode 44? Our next episode is going to be on what's it, Tuesday. Our next episode is gonna be on Sunday. I don't know the date, but that's gonna be our next episode if you guys are interested in joining then. Um, but that's pretty much gonna be our wrap for today, guys. If you guys want to have access to the recordings are available. I dropped the links to it to my website, so that way you guys can head over to the real estate educational side and learn a little bit more there. Um, if any other questions you guys have, you can message me on Meta, but I don't see any questions coming in. Oh, thank you. You have a great day as well too. If there's no questions, I really appreciate you guys coming in, and I hope to see you guys on our next episode on Sunday at 10 a.m. Pacific Standard Time. And if you want to come back and bring a property to get it analyzed, or an area you want to get it analyzed, by all means, bring it over. But again, I appreciate you guys coming in, and I'll see you guys on the next episode. Have a blessed day.